Welcome to the Whitwam Wealth Real Estate Podcast. I'm Scott Whitwam, and today our subject is DOGE Real Estate Investing.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam. Today we're talking about DOGE Real Estate Investing. And what is DOGE Real Estate Investing? Well, everybody has heard of what Elon Musk and the DOGE crew are doing in government for the Department of Government Efficiency. And this is having, and you may not see it yet, but this is having an impact on real estate investing, and it's having an impact in a very good way. As Elon Musk and his crew work with President Donald Trump to make the government more efficient, it's going to make the economy begin to roar. We're already seeing consumer confidence begin to rise. And that's a big thing for real estate investors. It doesn't matter whether you have buy and hold, whether you're wholesaling, whether you're fix and flipping. It doesn't matter what you're doing. When consumer confidence rise, the opportunities increase for all of us. There is so much buyer and seller pent up frustration from the last 3.5 years, started about March of 2022, and really is still running because we just got the latest government numbers from the last quarter of the Biden administration that showed that inflation was about 3.4%, going the opposite direction that Jerome Powell said it would be at the Fed. He's taken multiple wrong moves in the wrong direction. And, I talked about that quite a bit last year as he was cutting interest rates. The bond market has reacted adversely. And so right now we're at this place where the Fed has actually lowered interest rates, but because the economy has been so poor in such a turbulent state, the bond markets have continued to go up, and that's what's driving us with higher interest rates. Higher interest rates have kept buyers on the sidelines for the last 3 years. And higher interest rates have also kept sellers on the sidelines because sellers don't want to trade low-interest mortgages for a high one. So how does this help us as investors? Well, this is a great opportunity to be acquiring properties because there has been such low activity with buyers out there. There's a lot of sellers that are willing to listen and entertain cash offers, stuff that would be in the wholesale price range or discounted for most fix and flip investors, and some really good deals for cash flowing in cash flow markets and equity building markets, buy and hold properties. And it's only going to get better. So those who are on this leading edge of it, as we start to see what's going on now with DOGE, as they're going in and discovering all of this wasted money that Congress has allocated and has gone into these departments, but either been spent improperly, been spent in things that don't promote the benefit of you and I, the citizens of the U.S., and they start to pull that money back and claw that money back, it's going to start bringing money back in. I would like to see the government take that money and apply it directly to the national debt, because that will be a way to actually start to reduce or lower the inflationary rate by clawing back money that was put out into the marketplace. I heard a proposal this morning from somebody who was speaking with Elon and said, wouldn't it be great if we get to the end in 2026 of that 2-year period and the government then provided $5,000 checks for everybody, returning the money that was recovered to the citizens. And I said, it's really kind of a good idea from the standpoint that it's our money. We're the guys paying taxes into it, especially as real estate investors. Sometimes I get hit with heavy capital gains. I'm sure you do too, on some of our real estate plays if we're not running 1031s on them, or if we're not putting them into long-term hold investments. Sometimes we have some capital gains issues, and so we're pumping money into these things the government's been wasting all this money on. And now when we pull it back, I mean, it sounds like really good. Let's send everybody out $5,000. The only problem is, and it is our money, the only problem with doing that is it's going to flood the economy with more dollars, which was the same problem we had under Biden's administration, where they were spending trillions of dollars, pumping it out into the economy under the new Green Deal, which really wasn't even well, they didn't call it that. They called it the Inflation Reduction Act, but it was really the Green New Deal, and it really wasn't adding any value. And we're seeing the same thing happen again with those kind of dollars. All these companies that are on the green side, I mean, we saw it back years ago with Solyndra, we've seen it with First Solar, we've seen it with some of these, but now we're seeing, electric auto manufacturers shutting down. We see several of the green energy companies going into Chapter 11. I was just watching a documentary on one of the power companies that had some solar plants in California where they use reflective solar, and the cost to produce that energy is so high that they're getting ready to file bankruptcy. And so let's get that money back. Let's put it into things that actually work. And then what that's going to do is it's going to start to bring interest rates down, because the bond market is going to act properly. And so I'm hoping that when we get to where we're actually seeing the government actually pull these, not just freeze the money, but actually pull the money back in to the Federal Reserve, and so that it's money that's available, that we recapture that money and apply it towards the national debt. I'm hoping that President Trump takes that action versus sending more money out into the market, where it will certainly cause some inflation. Now, I know there's a lot of people out there that after coming through these last 3 years could use a check, in the mail to help them just, to pay their bills, pay their credit cards, pay their cars. I get it. I've been through this same economy with you in an industry that the Biden administration basically shut down, the real estate industry, whether it's on the brokerage side or whether it's in the investing side. And so we've had to be very cautious, really focus on our numbers and stuff. So I understand how neat the windfall would be and how beneficial it would be to some families. But I think overall, when I'm thinking about my kids, when I'm thinking about my grandkids and my great-grandkids, I much rather see that money be placed towards the federal debt and get it down, and let's build a strong economy that can bring reasonable interest rates. I think if we get our interest rates back, we'll just say in the 5% area, 5.5%, you're going to see the floodgates open. We have a housing shortage in the United States of America, and many of the big cities, the big metro areas are adopting these new ADU rules, these additional dwelling unit rules, in order to help to compensate for that, in order to provide some more housing. But let's face it, do people really want to live in a 800 square foot ADU, or would they rather live in, a 1,200 square foot house, a 2,200 square foot house? We really need to be building houses on lots and opening up, but we won't be able to open that up until we get interest rates back down where buyers can afford to buy homes. The fact is that home prices are not going to drop significantly, because we had you add the new inflation numbers that we just got over the last three and a half years, we've had over 30% inflation in the United States. I mean, that's ridiculous. If you had $100 in the bank in 2021, it's worth $70 today. I mean, think about that. That is just ripping off money, but we can't get it back because the prices are what they are. We're not going to. I don't think we'll ever be able to come to a time where we actually see deflation. The government doesn't want deflation to begin with, because deflation hurts its ability to pay its national debt. If we had no national debt, we could actually be in a place where prices could go down and it wouldn't harm the economy. But we're not in a place like that because the government needs inflation in order to make the current dollars they owe worth less money. I mean, we're spending $2 trillion a year as a nation on interest. And we're spending money we don't have on things we don't have. So that's why I like what DOGE is doing. And I think it's going to help us as real estate investors. And I think you're going to start seeing it come a little bit quicker, especially if with these new tax cuts they're talking about to really help out, the blue collar. I think you're going to see some additional disposable income and people be in a place. We get interest rates down a little bit. They're going to be in a place in order to abide into the home affordability, kind of matrix. Their incomes will now be at a place where they have the money in order to buy, to put down payments. I think that we've got some really good things coming. And so for investors, I think that I've had some investors who are on the sidelines. I hear, the financial guys talking about keeping your money in cash and take some of it out of the stock market because there's going to be some volatility because price to earnings are all out of whack in the stock market. Well, this is a good time, I think, to invest in real estate and to see if you can't find some deals out there. We've got a lot of properties all across the nation that have higher than market normal days on market. And those properties are ones that you certainly, if you're buying off the MLS, give you some good negotiating power. There's also a lot of properties that are suffering from severe deferred maintenance because people couldn't afford to do maintenance they normally would over the last 3 to 4 years. And so a lot of those properties can also be picked up where you buy them in as-is condition, which is what we love to do. My company likes to work direct with seller. That's our main mode. But I've got some friends who buy off the MLS and do real good. But if we can get direct to seller, a lot of times you can go over the deferred maintenance issue and provide an opportunity for people who would rather get out from under the burden currently and pick those properties up. I think that it's that we're going to see things get even better. You're going to see the political discourse, I think, continue to rage during this time because I think Elon Musk is upsetting a lot of apple carts right now, whether it'll be at Social Security, whether it's going to be at Treasury, whether it's going to be like at the U.S. Aid Department, which they basically have shut down and rolled back under the State Department because of, the list of things. And, you can watch any of the conservative news outlets who are actually talking about this thing and just see the list of the millions and billions of dollars going to things that we don't need to be funding. You think about this, real estate investor, every time the government spends $100 million of our money out there, they're taking money out of our pocket. Now, if they're building bridges, if they're fixing roadways, how many of us would appreciate some of the freeways and highways being rebuilt? But if they're doing those kind of things, they're actually servicing our industry, creating better transportation for delivery of goods and services, creating better communities, giving better thoroughfares. I've been on some of these freeways in some of these states, and I just can't believe it. It's like, where is the federal highway money? Where is the state highway money? I go to California and I hit some really bad roads. I'm thinking, I'm paying $7 a gallon for gasoline in California. What are they doing with the tax money? Again, we need to get much more efficient in order to facilitate and increase this real estate market. Because I think that even as we're in the spring buying season on the what I would say the residential MLS side of things or the realtor side of things, we're starting to see, people's interest pick up. And I think we're starting to see sales pick up slightly. I'm waiting to see what January's numbers are, but I'm sure February numbers are going to be better. One of the things that I'm seeing nationwide, though, is an increase in inventory. Seller, I talked about the pent-up seller frustrations. People are ready to sell their homes. I think that we're going to see some things start to break out because people are confident in what President Donald Trump and the DOGE team are doing to recapture money, get rid of waste, and shine the light on the corruption. And if you want to know whose money is being taken back on your behalf, just listen to the people that are yelling the loudest. They're the people that were getting the money, because now they're clamoring about it. And I'm sure that there's going to be some good programs that accidentally get shut down, maybe even get cut. But you know what? Congress can be good at fixing those, because they can identify that, oh, no, this was actually a good program and we want to continue to fund this. But I think that all of this is going to work to our advantage. I am much more positive on being in the marketplace. We are, upping our scale of investment activity. We want to try to start acquiring even more inventory right now, because when it does get good, you want to be the person that has bought low and sell high. And I really think that we're coming in based on what's going on with DOGE and some of the other things with, Scott Besson over at Treasury and some of these other things that are happening. I think that really that our real estate future is going to be much stronger. And I think this kind of coincides with what the CFO of the National Association of Realtors said. And he is believing that 2025 and 2026 is going to see a recovery in this industry. And if you wait as an investor too long, you're going to be, again, competing with all the new investors coming out of the woodwork. You're going to be competing with the retail buyers, and you're going to be complaining again about prices, even on the wholesale side of real estate, being too high. It was much harder in 2021 and 2022 to acquire super good deals, I think, on real estate versus what it is today, based on what we're seeing and what we're experiencing and what I'm actually hearing from our investor students and investors across the nation. So I think DOGE in real estate investing is very good for us. I think you're going to see some real positive outcomes from this for us as real estate investors, and I really encourage you to be ready. In fact, as even ramp up and get ready for the surge in buyer activity and that's coming up. This is really going to help, I think, all of us, since there's a lot of people that have been on the sidelines. They're going to need places to live. They're going to come out of mom's basement. They're going to come out of living with their brothers and sisters. They're going to look for places instead of living with relatives. They're going to look for their own places, whether it's on the rental side. But there's going to be a lot of families who are ready to buy. And I want to take advantage of that. I want to thank you for being part of the Whitwam Wealth Real Estate Podcast. This is Scott Whitwam. Remember, you can become part of our growing community by liking and subscribing to this channel. Be sure to find us on your favorite podcast network. We're found on Apple Podcast, iHeart Podcast, YouTube, and actually wherever you like to listen to your podcast. This is Scott Whitwam for the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.